Imagine a world where money moves faster than your ability to notice it. You swipe your card for coffee, and before you even take a sip, artificial intelligence has already analyzed your spending habits, predicted your next purchase, and adjusted your financial profile. Your bank account no longer just holds money, it studies you, your behavior, your discipline, your weaknesses, and even your future. This isn't science fiction, this is finance in 2026. Right now, one of the most searched finance topics in America is AI in finance and automation. People aren't just curious, they're anxious. They're typing questions like, is AI controlling the stock market? Can AI manage money better than humans? And the truth is, AI didn't arrive loudly, it slipped in quietly. Finance used to be about spreadsheets and human judgment. Today, it's about algorithms, machine learning models, and predictive systems. AI isn't just helping finance, it's rewriting the rules. Banks no longer rely solely on people to decide whether you get a loan. Your credit score is no longer just a number. It's a living data profile that updates constantly. That's why people are nervous. Hedge funds trust algorithms more than human intuition. AI sees patterns humans never could, and it never sleeps, never panics, never second guesses itself. That's what makes it so powerful. When markets drop, humans feel fear. AI feels opportunity. The average investor struggles not because they're lazy, but because they're competing with machines operating at impossible speeds. Personal finance has also transformed. Budgeting apps no longer just track expenses, they predict outcomes. Robo-advisors are replacing human financial planners for millions of people. But there's a darker side. The more power AI gains, the more control shifts toward institutions that own the algorithms. Whoever controls the data controls the flow of money. Finance in 2026 is no longer just about cash, it's about data, and AI is the most powerful player in the game. In the next part, we'll look at the backbone of this automation. Picture walking into a bank and seeing no tellers, no advisors, no managers, just screens, bots, and automated systems. It sounds futuristic, but it's already happening. In 2026, automation is the backbone of the American banking system. AI has replaced thousands of finance jobs quietly. Loan approvals that once took days now take seconds. Fraud detection is now handled by AI systems monitoring transactions in real time. If something looks suspicious, your account can be frozen instantly, sometimes correctly, sometimes not. That's why people are searching for answers. AI isn't perfect, but it's faster than humans. Accounting firms now rely on automation for tax filings, audits, and compliance. Tasks that once required teams of professionals are now handled by a single system. Speed goes up and jobs disappear. This is why finance professionals are uneasy. Analysts, auditors, CFOs, all asking the same question: am I next? Automation doesn't just change jobs, it changes power. Balance shifts toward algorithms. On Wall Street, high-frequency trading firms use AI bots that execute trades in microseconds. By the time a human reacts, the trade is already finished. Retail investors never stood a chance. This speed has increased market volatility. When multiple AI systems respond to the same signals at once, markets can spike or crash suddenly, leaving humans confused and unprepared. But automation isn't all bad. For small businesses, AI finance tools are a blessing. Cash flow forecasting and expense optimization are now accessible without expensive teams. Even individuals benefit. The real danger begins when people trust automation blindly. AI relies entirely on data. If the data is biased, the decisions are biased. Giving algorithms control over money affects trust and fairness. Imagine waking up one morning and realizing that your investments made money while you were asleep. No phone calls, no stress, no emotional decisions, just quiet growth happening in the background. That's the promise AI investing is selling. In 2026, AI-powered investing is no longer just for the wealthy. It's everywhere. Apps, platforms, retirement accounts, all quietly using algorithms to decide where your money goes next. And for many people, it feels like magic. Traditional investing was emotional. People bought when markets felt safe and sold when fear hit. AI doesn't feel fear. It doesn't chase hype. It works on probability, patterns, and historical data, and that alone gives it an edge. Robo-advisors now manage trillions of dollars globally. They automatically rebalance portfolios, reduce risk exposure, and optimize returns. When markets drop, AI doesn't panic. It adjusts. This is why many trust AI more than humans. But here's the uncomfortable reality. AI investing works best for people who already have money to invest. The more capital you have, the more efficiently AI can optimize returns. This is where inequality quietly grows. Wealthy investors gain access to advanced AI models, private data feeds, and faster execution systems, while retail investors get simplified versions. Same concept, very different power. AI amplifies whatever system it's placed into. Still, AI investing has changed one major thing: access. People who never invested before are now entering the market. Automation removes complexity, lowers fear, and makes investing feel approachable. That's why so many are asking questions. That's why so many Americans are asking whether AI investing is safe, whether a robot can manage retirement, and whether robo-advisors can be trusted. The truth is, AI reduces emotional mistakes, but it introduces a new risk. The truth is, AI investing isn't about replacing humans completely, it's about reducing emotional mistakes. But it introduces a new risk: overconfidence. Because when people stop understanding where their money goes, they stop questioning. Think about the last financial decision you made. Was it logical or emotional? Most people believe they're rational with money, but data says otherwise. Fear, greed, impatience, and social pressure control financial behavior far more than logic ever has, and AI knows this. In 2026, AI doesn't just manage money, it studies human psychology. Every click, every purchase, every hesitation feeds the system, allowing AI to understand your financial personality better than you do. Humans chase trends, AI follows probabilities. Humans panic during downturns, AI waits. Humans fear missing out, AI ignores noise. This psychological advantage is massive. Banks and fintech platforms now design AI systems specifically to counter human weaknesses. Automated savings increase contributions when you're less likely to notice. AI nudges discourage impulsive spending. Investment apps delay panic selling by design. This isn't accidental, it's behavioral finance powered by machine learning. And it works. People save more, invest longer, and make fewer emotional mistakes. But the negative side is control. If AI can guide behavior, it can also manipulate it. Financial nudges can become pressure, and convenience can turn into dependency. This raises an uncomfortable question. Who decides what's best for your money? You or the algorithm? In 2026, that line is blurry. AI systems are trained on massive datasets, but those datasets reflect human bias. AI doesn't remove bias, it scales it. That's why some people are rejected for loans without explanation, why credit limits change unexpectedly, and why automated systems sometimes feel unfair. And when you ask why, there's no human to argue with, just a model. Money used to be physical, then it became digital, and now it's becoming intelligent. In 2026, money doesn't just sit in accounts, it moves, adapts, and reacts, guided by AI. This shift is changing what money represents. AI-powered digital wallets now optimize spending automatically. Subscription management, bill timing, and dynamic budgeting are handled silently. Money flows with intention, not randomness. This is a complete paradigm shift. Central banks are watching closely. Governments are experimenting with digital currencies powered by AI monitoring systems, aiming for efficiency, stability, and control. But control comes at a cost. When money becomes programmable, rules can be enforced automatically: spending limits, access restrictions, behavioral triggers. This power is unprecedented. AI can reduce crime, but it can also remove anonymity and choice. This is the crossroads finance stands at. AI doesn't care about ideology, it cares about optimization, and optimized systems rarely prioritize freedom. They prioritize efficiency. What does that mean for us? Imagine waking up one day and realizing your money is gone. Not stolen by a hacker, not spent by mistake, but frozen by a system you can't speak to. No phone number, no manager, just a notification saying the decision was made automatically. This is the risk side of AI in finance. AI systems are powerful, but they are not invincible. They fail, they misinterpret data, and they react too aggressively. When they do, the consequences are instant. A human mistake might take days to cause damage, but an AI mistake happens in milliseconds. In 2026, financial institutions rely heavily on automated risk management. If an algorithm detects unusual behavior, it acts immediately. For innocent users, it feels like punishment without trial. The problem isn't speed, it's accountability. When a human makes a bad decision, you can question it. When an AI does, the logic is buried inside a black box model no one fully understands. Even the engineers cannot always explain why it happened. Add cyber risk to this reality. AI systems are prime targets. Hackers don't always need to steal money directly. They can manipulate data, trigger false signals, and let the system damage itself. A small flaw can create massive market flash crashes. This has already happened quietly. Flash crashes, liquidity shortages, or false alerts that ripple across the economy. This is why regulators are worried. Banks are investing billions into security, and people are searching for answers. People are searching for answers about whether AI can be hacked, what happens when automated systems fail, and who is responsible when AI makes financial decisions. This black box problem is terrifying in finance. For decades, governments controlled money through policies, interest rates, and regulation. But in 2026, they face a new challenge. Algorithms that move faster than laws can keep up. Regulating AI in finance is like trying to catch a moving train blindfolded. Governments understand the risks. They know AI can amplify inequality and destabilize markets if left unchecked, but they cannot stop progress. Instead, regulators try to build guardrails, transparency rules, and audit requirements. Enforcing these rules is harder than writing them. AI systems evolve constantly, models update, and something compliant today may not be tomorrow. This creates tension between innovation and control. Banks want freedom, governments want stability, and AI pulls everything forward. In reality, humans often approve AI recommendations without question because slowing down costs money. This is how control quietly shifts. Finance is global, and AI ignores borders. An algorithm in one country can impact markets worldwide. When regulations differ, companies move where rules are weaker, creating dangerous gaps. People sense this instability, which is why trust in financial systems feels fragile. The irony is that AI could make finance fairer, but without strong oversight, it simply reinforces whoever already holds power. Trust is the foundation of finance, and in 2026, it's being tested. We need to find a way to balance the power of machines with the ethics of humans. In the next part, we'll see how this affects your individual financial literacy. For most people, AI in finance feels invisible until it directly affects their lives. It decides loan approvals, credit limits, interest rates, and how investments behave, yet people never see the system itself, only the outcome. In 2026, financial literacy is no longer just about understanding money. It's about understanding systems. People who understand automation gain an edge, while those who don't feel powerless. AI rewards predictability. AI rewards consistency, discipline, and predictability. Irregular income, unstable spending, and financial stress confuse algorithms, often leading to worse outcomes. This creates a new divide in our society. This divide isn't just between rich and poor, but between those who understand the system and those who don't. Some adapt by structuring their finances to work with AI through automated savings and predictable spending. Others struggle not because they are irresponsible, but because life itself is unpredictable. This is where AI feels unfair. At the same time, AI offers opportunity to those previously excluded from the system. Automation lowers barriers, providing access to tools that simplify budgeting and planning. But the system is not emotional, it is optimized. And optimization does not care about context, it cares about patterns. Understanding these patterns is the key to the future. In the final segments, we'll look at how to build a mindset that thrives alongside these machines. It's time to learn the rules of the new game. The future of finance does not belong only to machines. It belongs to people who learn how to work alongside them. The smartest move in 2026 is not fighting AI, but understanding it. AI rewards patience, long-term thinking, and emotional control. People who succeed build systems instead of relying on willpower. Automated savings, automated investing, and automated discipline remove emotion from daily decisions while humans focus on strategy. They also remain involved. They do not blindly trust automation. They review, question, and adjust, understanding that AI is a tool, not a replacement for responsibility. This mindset shift matters. AI does not make people rich. It amplifies behavior. Discipline scales discipline, while recklessness scales damage. This is the lesson most people miss, and it is why some thrive quietly while others fall behind. AI is a tool to scale your own discipline. Thriving in this era requires a hybrid approach. In our final segments, we'll talk about the survival knowledge you need for 2026 and how to bridge the gap between human judgment and machine speed. The future of finance is not human versus machine. It is hybrid. AI will dominate speed, data analysis, and execution, while humans remain essential for judgment, ethics, and long-term vision. This is the new reality. The real danger is not AI replacing humans, but humans disconnecting from how money actually works. In 2026, financial knowledge is no longer optional. It is survival knowledge. AI has made money smarter, but also more complex. Those who adapt will grow steadily without noise, while those who do not will feel left behind without understanding why. This is not a warning, it is an invitation. Learn the system, question it, use it, and respect it. Respect the system, because AI is already managing your money. The future belongs to the curious and the disciplined. It's an invitation to take control of your financial destiny in this new machine-driven world. In the final parts of our series, we'll dive into how these predictive systems shape your career and lifestyle. Stay with us as we wrap up this deep dive into the revolution of 2026. The future is here.